Hi, hello, morning, and welcome to Money Mantra. All the contents in these videos are only for the education purpose. If you are willing to invest or trade, please analyze yourself or consult with your financial advisor. So, in this video, we will discuss about the history of the Karnataka Bank and its investment opportunity. The bank is founded in 18 February 1925 in 1924 in Mangaluru, led by B.R. Vaishar HR with a mission to support local agriculture, trade, and small business. The traditional bank services tailored to be the South Kannada region. The slogan is Your Family Bank Across India. The growth missions branches expansion from single branch to 957 branches, 1,188 ATMs, and 588 e-lobbies across 22 states and 2 union territories. So the key acquisitions when we see about Sinkeri Sharda Bank 1960, Chitragurga Bank 1964, Bank of Karnataka 1966. Technology leap, they adopt a financial core banking in 2000, launched Money Click Investment Banking, KBL Money Plus UPI apps. So customer based, over 11 million customers served nationwide, long-term focus and strategy. Their mission to be technology savvy, customer centric. It's a customer centric progressive bank with national presence. So the strategic focused on RAM, retail, agriculture, MSME segments, move away from low yielding large corporate banks. So so it is always move away from the corporate loans. So in the digital transformation, AI-driven credit assessment tools, predictive analysis for personalized banking, then sustainability, reduce carbon footprint by 30% by 2024. So invest 50 crore in CSR Institute in 2024. So the future vision is growth targets, compound annual growth for 15% in total assets by 2024. They are already predicted ROE target 12% of 10 percentage. Then green financing 500 crore disbursed for renewable energy project targeting 1000 crore by 2024. Then customer experience, they are 24 by 7 helpline with 2 minutes response time, mobile banking apps with over 1 million downloads, employee development. There are 10 crore allotted for training in digital bank and CRM. So Now let us now let us look about the stock opportunity of Karnataka Bank using the parameters. So the stock CMB, actually the current market price is 196.987. The capital is 6,422 crore. Actually, it is the uh, small comes under the small scale. The price to earnings ratio is 5.52, but actually as per our parameters range, it should be less than 15 is very good. At least it should be less than industrial value of PE. Then price to book ratio is 0.53. It is less than 1, so it is actually is very good. Then PEG ratio is 0.15. It should be less than 2.5, so it is very good. Price to sales ratio is 0.71. It is less than 1, so it is also be very good. Then quick ratio should be greater than 1. Here 6.8 quick ratio. Then debit to equity is 8.83. Actually it should be less than 1, because in banking we mostly they get the deposit from the outside publics and someone's, so the debit should be quite higher when compared to the industries. So it is actually weak for the banking sector, we can say as it is to be the normal. So the 52 weeks high to low 243 is the high, and low is 162.2 is the low. So 52 weeks high to low ratio is actually 1.49, but actually it should be between 1.5 to 2. So it is little bit 0.01. There will be a difference in between this range. It's very good. Then ROC, because this ROCE, ROE, then sales growth, all these things for the production industries, for this banking also we can consider unless it is be reaching or not. So here actually ROCE is 6.33, but here our range it should be is greater than 15. Then our year on year sales growth is 2.5, because our parameters should be greater than 15. Then year on year profit after tax growth is 2.6, but it is negative 2.6, but it should be greater than 15 is good. Then the promoters, foreign institutional investors and domestic institutional investors, it should be greater. They should hold greater than 65%. But as per it is the public bank, there is no promoters. So the foreign institutional investors and domestic institutional investors, they are holding 23.98 and rest are holded by the publics. So the operating cash flow should be the increase in level to 5 to 10 years, but it is the negative of 7.17 the operating cash flow, and net profit it should be also in the increasing level, but here it is to be minus 2.60. Then when we compare to the stock current market price, it should be greater than exponential moving average of 200. So here actually exponential moving average is 196, but the stock price is 162. So when we compare to the this is actually it is out of our parameters, because it should be greater than 196, but currently we have the 196, currently we have 162. So promoters, there is no pledges because there is no promoters, only the publics or the major holdings. Then interest coverage rate, the interest coverage rate should be greater than 3 for a company in a strong position to pay its interest and all these things, but here it is minus 3.51. There it is to be get little bit weakness. Then net non-performing assets is a key measures of the bank for the asset quality. It's the measures of the bank's asset quality. So it is actually interest or the principal, it is overdue above 90 plus days. So here there is more than payments they have to receive above 90 plus days. So it is also negative 0.22 percentage. It is to be lagging. Then current account savings account ratio, if it is greater than 40 percentage, very good, but it should not be less than 30 percentage, but here 30.84. So 0.84, it is higher than in the critical stage of our parameters, so we can consider it is also quite okay. Then net interest margin for the private banks, it should be 3.5 percentage. 5 is often higher, it's quite okay, and public sector bank it should be 2.5 to 3.5, but here it is 0.72 percentage. It is in negative, so there is also one of the negative marks for this. Then capital adequacy ratio, that is CAR ratio. When we say is about the CAR ratio, it should be or it should be greater than 15 percentage is very safe and should not be less than 9 percentage. But as per our RBI, is the 9 is the deadline. So here actually 20.46. So this bank is current capital adequacy ratio is okay. Then the deposits, when we see the deposits, the bank is getting the good deposits 3.16. So basically when we compared all the parameters of these banks, only few parameters cannot be matchable with our parameters. So this bank is actually is okay, good, but when if you are getting in the fair price or if you are planning for a long time, this bank is okay. We can credibility of this bank is okay, we can see, but it is not we can get one night overnight, we not be get it as a good price or not. Okay, so next, based on the graphical representation of the stock, they reached maximum 242 rupees and now it is consolidation period. The stock may touch, this stock may touch 125 rupees to 150 rupees possible. It may come. So if you are, if someone is need to, if someone is need to buy the shares of this bank, we can wait till it be reach around 150 below. It is a good to accumulate, and it is giving a good dividend for also. So it is actually one of the good bank you can be buy when it is reaching 125 to 50. So I hope this is actually the all over about the banks, about its investments opportunities and all these things. So finally, at the end of this video, please be strong, be fit, and learn something about wealth management. If you like this video, please give a thumbs, comment, and subscribe. Thank you.